introductions for today. The complete biographies for our speakers are in your forum program, so I'll only offer brief introductions. Our first speaker is President of J.P. Morgan Chase Ohio Markets. Please welcome Jim Malls. Our next speaker is President and CEO of Consumer Credit Counseling Service of the Midwest, now known as Apprisen. I hope I pronounced that right. Apprisen? Everything has an app in it, you know. You have to change the name. Apprisen, excuse me. My cap is actually an old friend, so I can screw up on his. Next is the president of the Columbus Chamber. Please welcome Mike Dalby. And from The Ohio State University in Scarlet and Gray today, Dr. William Robbie. Our moderator today is a frequent moderator, and we really appreciate her doing this, Executive Director of Community Research Partners, Bobby Garber. Bobby, thank you. On behalf of the Columbus Metropolitan Club, let's welcome our speakers. Jim, we'll begin with you and your introduction to the research results.
Rich, thank you. Good afternoon, everyone. I was instructed by our esteemed staff within the J.P. Morgan Chase organization to go page by page, fact by fact. So the next 2 hours, hopefully they'll be serving cookies and you'll be ready to go. But no, honestly, I'm just going to hit the high points of this, and then we're going to get to the panel discussion, which I think we have a very, very, very good panel here. But before I do that, I'm going to make a special announcement. We're very excited to have with us today as a guest of J.P. Morgan Chase someone who is an Ohio resident, owns a small business, and was one of just 12 nationally, just 12 companies that was awarded $250,000 via a grant through our Mission to Small Business Initiative nationwide. And that person is with us today, and I want to ask Deb Stanczak to come on up here. Deb? That was not in the script. I wanted to embarrass her. But actually, congratulations. And I tell you what, this is what it's all about. It's small business people out there, many of you folks in the room that make the economy go, making all the tough decisions, taking all the risk in life and in the business, and we really appreciate that. And Deb's business is called Ronwear Portable Clothing. And if you want to say a couple of words about the business, because it's an inspiring mission that she has there. So, Deb?
Thank you. Thank you, Jim. Ronwear Portable Clothing was born out of necessity for my brother Ron, who was on dialysis back in 2004. Simultaneously, my husband Gary had multiple myeloma, which is a rare form of cancer, and he was undergoing chemo treatments. And my mother had congestive heart failure, and for some odd reasons, were getting blood transfusions. And the universal need for being warm and modest in treatment was vocalized between all three of these people. My mother-in-law had also fallen and broken her hip, and my father-in-law was in the ICU. And throughout the 7 years of caregiving, added to my 35 years of experience as an executive in retail women's clothing, I learned the other half of my business. And I believe that it was truly it wasn't by coincidence that the 7 years of caregiving was added to my resume. So I developed this makeshift shirt for my brother out of fleece, just slit the arm, put a zipper in it, threw it at him in his hospital room and said, "Here, try this. It'll keep you warm during treatment." And the next day I came in and he said, "You're going to be a millionaire." Everybody wants one of these, and you need to make more. Like, you need to make more now. Well, I was taking care of him. I was there every day. I had a little boy who was about 8 years old at the time. That was my only son, and the rest of my family was ill. And I said, Ron, I can't do this. And every time I would come in, he went in on March 3rd of '04, and he passed away on March 6th of '05. And every time I would come in, he would badger me to make more of these things. And one day I got very upset at him, and I said, look, I can't do it. I just can't. I mean, I was very stressed at that point. And the weekend he passed away, he said, please promise me that you will do this for other people. Everybody needs this. Like, they really need this. And he passed away, and then my mom got worse and passed away, and then my husband got worse, and he passed away. And 10 days after my husband passed away, my father-in-law suddenly died. And after it all, in May of 2008, my holistic chiropractor, who literally kept me alive through it all, said, what are you going to do for the rest of your life? And I really didn't know. I couldn't go back to retail. My son had just lost his whole family. And I said, well, I have this thing in the back of my closet that I started in '04 for my brother. And he said, well, what are you doing this afternoon? I want you to go home and recreate it. And the next time you come in, I want you to show me what you've done. And I thought, oh, great, now I have to be accountable to this man. But I did. I went home that afternoon, I pulled it out of the closet, and I started researching things, and people just came to me, and I started networking, and this little business began to grow right underneath my feet. And when I did looked up the statistics, I found that it was just an incredible market, a horrible market of dialysis, chemo, and infusion patients that need this product. So I redesigned it with some nurses and put it out to market, and within a few short months, we sold out. And we were manufacturing in the United States and could not find, after 3 more manufacturers, could not find someone to manufacture this product affordably, and ended up going to China, which took about 8 months to recreate, which actually did give me a much better quality product at a much better margin. So that's where we're at. When Chase called me to tell me about this winning, they had no idea, no idea what type of gift, what type of gift this was for my family and for all the people who need this. Because I could be, the joke is I could be in the middle of a tire center and everyone could relate to this product. So I thank you all, and I thank you for allowing me to be here today and for all the support that you've given me. You've truly changed my business's life. Thank you.
Thank you, Deb. Well deserved. Keep up the great work. So why the pulse of the Columbus consumer? Why are we here today? Well, as you know, many of you should know, we, JPMorgan Chase, have a huge commitment in the state, and most of that commitment here is in Central Ohio. 23,000 employees approximately statewide. Within Central Ohio, nearly 20,000 are here doing a number and variety of things, not only to support the local market, local consumers, local businesses, but also supporting global operations worldwide for JPMorgan. Last year alone, we added 2,500 new jobs to the region to get us close to that 20,000 number, and God willing, we're hoping to add a little bit more here to keep it growing within the franchise. Philanthropy. JPMorgan Chase in Ohio contributes about $5 million in philanthropy each year to deserving organizations, $3 million of which come here to Central Ohio, and that's where we donate a lot of that. And Cinnamon Pelly is here through our foundation. Thank you, Cinnamon, for your good work there. So the pulse of the consumer research really was done in, I believe we did one in Chicago late last year. Is that right, Mike? Apprisen? Yeah, Apprisen. And so really, and we have a couple others slated for some other key metropolitan areas, but this one really, I mean, Columbus is, on the short list of the first ones that we've done. And so what are we going to do? Well, really, we're doing it for a number of reasons. One, we want to find out what the trends are locally in each of these major markets. Secondly, what are on people's minds, whether you're the consumer, the business owner, student, person hopefully looking for work and getting work and all that. And then obviously with that information, we would love to customize and tailor products to the need that we're seeing and general trends in each community. So a little bit of the preview of the Columbus area findings. Again, I'm not going to go in detail and hit you with all the stats. I believe you have that information or a good snapshot of that information at your table. But here we go. Columbus consumers are slightly more confident than the general population in their local economy and personal finances, so that's very positive. Savings and retirement are of top-of-mind financial concerns. No surprise there. Taxes and fees, and of course healthcare costs, are the biggest influencers of local business growth. I'm sure we can all attest to that. And local consumers are making an effort to take control of their day-to-day financings, which is a great thing. So, on the positive side, Columbus area consumers more confident about their local economy and personal finances compared to the rest of the nation. I believe the number was 70% of the Columbus area respondents said their personal finances have already bottomed out and are improving, versus 65 for the national average. And then similarly, 74% of the Columbus area consumers believe their local economy has bottomed out and is on the upswing, versus 67% nationally. The good news is here is, and we all know this, local unemployment trends and data are a lot lower here in the central Ohio region, the city of Columbus and Franklin County, than the Ohio average and the national average. So that's great news for this economy and for people living here in our communities. Briefly, retirement and savings. Biggest concerns among, again, the consumers having money for savings and retirement. So some of the things, you know, we obviously want to help with is education, literacy around financial planning, and making sure folks have the wherewithal and understand the need of what products are best served to fit their needs. Taking financial control, I talked about. I thought this was interesting, though. One bullet point that came out of this, almost half, 49%, plan to buy a new car within the next 5 years. So that's against a 38% of consumer sentiment nationwide. And in that same vein, about a quarter, 24%, plan to buy a home or condo over the next 5 years versus 20% nationwide. I thought that was very telling of some good data points on that. So when it comes to business in Columbus, factors that influence growth, I talked a little bit about it. Taxes, fees, and healthcare costs. No surprise there. I'm not going to go in some of the data points on that, but you can see that in your table. And then when asked the best thing about living in the Columbus area respondents said this. Nearly 3/4, 74% said this. Reasons cited about good things, the best things living here in Columbus are quality of life, including culture, climate, beautiful day today, and diversity as the best thing about living in the Columbus area. And I think those are three key points to make folks from around the country, from around the state, to come and relocate here to Columbus, to Central Ohio, because of, one, the job opportunities and the culture and communities that we have. So in conclusion, and before I turn it over to Bobby, really, you know, we've tailored a number of products and services at the bank, at our firm, to kind of meet the increasing needs and demands of the consumers. And some of these examples include Chase Blueprint, Chase Liquid, which is really a prepaid card for a number of folks and purposes for that. And then also, you know, we're investing heavily and banking heavily and lending heavily to small business. JPMorgan Chase was the #1 small business lender in the nation, and we continue to earn that top spot every year. And year to date, I believe we've made $10 billion in new loans there, which is a 35% increase over last year to date. So we're continuing to support the small businesses like Deb's, for example, which really make the economy go. And then lastly, you know, one of the other things we're doing, and the reason why we do these surveys, is the consumer. You guys yourselves want innovation. You want new ways, cheaper, better, faster ways of doing things. And so we want to make sure we as a firm are proactive in taking a leadership role in that regard. So with that, I'd like to turn it over to Bobby, and we'll start with the panel discussion of the program. Thank you.
Thanks, Jim. Well, we have a great panel of experts who bring various perspectives to this discussion. And so what I'd like to do is start by giving each of them a chance to give kind of their thoughts and reactions, and I'm going to throw a question at each one that is somewhat targeted, hopefully, to their area of expertise. And I'm going to start with Bill Robbie, whose expertise is in the area of taxes, to just talk a little bit about your reaction to the survey and the survey findings in general, but whether what you know about taxes is consistent with the findings. And I know another area that you've looked at is implications for retirement planning. So if you see some connections there, some thoughts about that.
Well, thanks for having me today. This is an interesting set of data. It's questions that were asked 3-4 months ago. I think that it confirms the idea that maybe Ohio is a little bit ahead of the rest of the nation, and that Columbus is even further ahead in recovering from a bad couple of years, and that our confidence in going forward does seem to be a few inches ahead of where the rest of the nation might expect it to be. One of the questions about what are the biggest determinants of growth of business, the answers were the predictable, as Jim was saying, taxes and health care. And we're no longer number 47 out of 51 on the rankings of business climate in taxes. That is, Ohio is climbing slowly, cuts in the individual income tax, and the corporate income tax really doesn't exist anymore. And all of that looks good when you're trying to recruit business. I do remind you, though, that 2013 brings us anticipated great increases in taxes and health care costs. And the politicians who seem to always be on the brink of a crisis really have one staring at them now, as various things are set to expire or to kick in, all to the negative of the consumer, it seems to me. So I'm happy to be confident, but eventually that calendar is going to turn, and we're going to have to address, either during lame duck in Congress or who's ever in Congress in January, to try and avoid a further crisis. Of course, the prediction is, well, we'll just push it down a couple of years, and I don't think it'll be a cliff. I don't think it's Armageddon, but it does represent serious issues, as our survey shows, that we do have to address. From retirement and estate planning standpoint, I think the survey shows some good forethought and some dedication to the future. People who responded to the survey, I think it was 15%, about the right number, say I'm going to be retiring shortly. If the economy is really down, I'm going to keep working forever. I can't retire yet. It looks like that number's coming back. And another question, how confident are you about your level of retirement savings? There were fewer in the Columbus survey of our residents who said, boy, I'm really concerned about this, than there were nationwide. Now, I think, again, that's a good sign. That's confidence. Professor types like me like to say, well, you don't have anywhere near what you need, don't kid yourself. And we may be all in that boat, but nobody's panicking. And I think we would look to our leadership in town and elsewhere to provide guidance for that. But again, at least we're not shedding our skin and saying, I can't retire, I don't have anywhere near enough. I'm going to keep contributing to and planning with my retirement assets. One more thing that I saw there, sort of related to the long view of things and financial responsibility, was a question that was open-ended. Why do you do this? Why are you responsible? Why do you manage your finances well, or at least try to? And one of the numbers where Columbus was far above the national average was, I want to be a good role model to my children. Some of the other answers were, it's the right thing to do, or I'm afraid to go to jail, or any of these other sort of incentives. But the one that really encouraged me was, I'm doing it because I want to set a good role model. I want others to see how it should be done. And that makes me feel good about Columbus and the consumers.
Great. Michael Dalby, who's the president of the Columbus Chamber and spends lots and lots of time talking to businesses in the community. So I'm interested in, based on your experience in dealing with local businesses and small businesses, how did you view the data? Was there anything surprising? Is it consistent with what you're seeing, and anything you could add from the business perspective?
No, thanks, Robbie. Right, like what Bill said, I mean, it's kind of the findings that show that the major kind of issues that businesses are a little hesitant about, taxes, fees, you could also call it regulation, some kind or another. On top of that, healthcare costs. Healthcare costs, again, sit there on their minds. They're just not certain what's going to happen there. And the concept that I would add in here would be the uncertainty. I think that's the one that you can just kind of package it all in this concept of we're not certain what's going to be happening. And when you induce uncertainty into an economy, it just makes a lot of people, they just kind of sit back. They sit down, they squat, they do whatever term you want to use. I grew up in Texas, so squatting was a big thing. So. But so you just sit back. You're not going to take action. And so now we hear the reports of companies sitting on a lot of cash on the sidelines. You just have a lot of hesitancy to take action. And I think that was confirmed. That was kind of brought out in this survey, at least from the business side of the house. So we do see that. We have a huge component of our economy that is consumer driven, and how the consumer feels. Do you feel like you've got enough money? Do you feel comfortable enough to make certain expenditures? I think is a huge component of our economy. But then it becomes, okay, so is there enough consumer sentiment out there, positive, to drive businesses to say, now we're going to start making some investments because we see there's enough demand out there, we're going to put the money out. I don't think we're seeing that yet. We see improvements in certain pockets of the economy. It's certainly not across the board, but it is better here in Central Ohio than in many parts of the United States. So we know that clearly, and we see it with our businesses. But I think it's just mostly that concept of uncertainty that's the biggest challenge.
Okay. Mike Kappas, do you deal with folks who may have challenges in terms of financial management and their finances? And I'm interested in how these findings compare to the issues faced by the population that your organization serves.
Interesting question for me. And first of all, thanks to the Metropolitan Club for hosting this, and to Chase, who is a great partner of ours in the credit counseling world. I think for us, and clearly we're boots on the ground with consumers. Consumers all over the country. We have 40 offices in 10 states, but we're authorized to do business in 49 of the 50 states, and my colleague, Mr. Allen, is trying to get Rhode Island to get us approved. With all, thumbs up. Yeah, I hope so. With all that said, we looked at the survey with great interest because for the last 55 years, we've been dealing with a troubled consumer. We offer credit counseling, we offer housing counseling, and now with the new bankruptcy law, we offer bankruptcy counseling. And there's probably not anyone in this room that doesn't know that someone that has too much debt, or has lost a job, lost a home, or knows somebody that has done any of those things. And the fortunate thing is we try to deal with a lot of those people every day. Central Ohio, and someone said it, is a lot better off than some of our offices in other parts of this state or in other parts of this country down south. But for here, we're dealing with a consumer, and truly since I've been around for 14 years at Consumer Credit, we've been dealing with a low to moderate income family. And in the last 5 years, that has changed dramatically. People who had been living the dream all of a sudden lost a job, all of a sudden couldn't make their mortgage payment, or the mortgage payment adjusted from a teaser rate, and they were at our doorsteps and they'd never been there before. So for us, it was a challenge not only to get them in the door, because that was always for someone else. The consumer is in a rebuilding mode now. The consumer needs to recapture all of the things they've lost, whether it's the equity in their home or whether it's rebuilding that savings that they had to use while they were unemployed. It's no surprise the credit card companies canceled 100 million accounts in the last 12 to 24 months. Probably many of those should never have been issued to begin with. You may know someone that is been a victim of that, or who has had their line of equity in their home reduced because the home isn't worth what it used to be. And all these things exist out there today, and we're dealing with a client who maybe has filed bankruptcy and now they want to buy a home, or maybe has depleted their savings and they want to know how to save more. So for us, this survey was a reconfirmation of the people we're seeing every day who need help, who want help. And unfortunately, while you take a lot of things for granted, there are a lot of people out there that are highly educated that can't balance their checkbook. There are a lot of people out there that don't understand that you can't spend more than you earn. And while I thought I'd seen a lot of things during my long career in banking, we could do some storytelling here that would shock you, and my staff that's here has provided me, and I got to go through this whole file. They'll let me back in the office. You know, I have quotes from people who just need what you all would consider basic help to just rebuild their financial lives. So for us, it's a reconfirmation. We're not surprised by, there's a little anxiety over not having enough money in savings. There's anxiety about retirement. There's anxiety about actually being able to rebuild that rainy day fund. And these are all the things we're seeing. So the survey, we plan to use it in a very effective way to work with our partners to see the different kinds of help that we can bring to individuals.
Jim, I'm interested in, I know you've talked about some of the new products you have, but is there anything else you see on the horizon that Chase is going to be doing in response to the survey findings?
Well, you know, like I said earlier, you know, we want to get ahead of what the consumer wants. And part of the way to do that is to conduct some of these surveys. And, you know, we've worked with, you know, Mike's organization over many years doing a lot of credit counseling for individuals and others alike. And by the way, I shameless plug, you know, this organization, if you don't know it, get to know it, because they do fabulous work across the country, and especially here in Ohio. And I'm not just saying that because it's a very important, critical job that they do in terms of helping families, individuals alike that for the first time find themselves in an environment that they're not comfortable with, used to, and don't know how to get out of it. And so they turn to organizations like Apprisen, along with our help, to make sure we're, you know, providing the literacy and the education from a financial perspective to that equation as well. So thanks for what you're doing. So to answer your question, Bobby, thanks for the question. I would just say that our organization, we have a long history, JP Morgan Chase here through the Bank One days obviously, have a long history of being innovative in the financial services industry, and we're going to continue to do that. So really what we want to do is follow the needs and wants and desires of our client base, including the consumer. And Michael said it so well that this is a consumer-driven economy. 2/3 or more, maybe 70% plus is a consumer bias to our economy. So we really better watch out and find out what's happening with the consumer, or, you know, you're going to lose, and that's all of us. So a lot of things, you know, Americans want, you know, the latest and best, and in the form of technology and high-tech this and web-based financial solution and innovative, you know, teller machines that are automated these days. So we're providing those services today, but more importantly, we're providing those services in addition to educating the consumer on why they need it or why they shouldn't need it, frankly. I see Christy Gale here as well, and she is our manager in our main banking center here, just literally 50 yards away. And you talk about all the technology savvy needs of the consumer. Well, they still want to walk into a banking center and meet with our banking staff and personnel and relationship bankers, because at the end of the day, it's still a relationship business. So we have not lost sight as an organization to ensure that our banking centers are the highest and best in terms of a comfortable environment for people to conduct business and inquire about the array of products and services that are out there that may fit a tailored need.
I'm going to throw out a couple. See, I gave them a little heads up for this first questions, but now I have the real questions that they haven't heard. So I'm going to ask one. This sort of comes out of my own view of the world as a parent of a 26-year-old and 27-year-old sons, and seeing what's happening in terms of young people coming out of college and really having a difficult time maybe getting themselves established, very different from what it was like a generation ago. And so I'm wondering if there's any thoughts about, in the current environment, what this means for young people getting established, being able to develop wealth, have the access to financial products. Anything you want to say about what's happening with youth these days?
Can I start with that?
Sure.
We're very concerned. There's $1 trillion of student loans out there of which about 2/3 are in the hands of people 40 and under. We also see youngsters who come to us that are concerned because they've just realized the dream. They've graduated from college. We've been at Ohio State University, and I won't mention the particular school, where the graduate is coming out with $150,000 worth of debt. Or a school teacher who is now starting a new profession and has $60,000 worth of debt. The critical need for them to understand how to manage their finances right out of the gate has never been greater. And we're concerned, and this is just the perspective we get, all of us know we've had a housing crisis here. I'm afraid that the next crisis is at the consumer level with the student loan. And I would urge each of you who have children that are either going into school to take a long, hard look at the various options before just signing on the dotted line, because many parents now, and student loans, as we all know, are not forgiven in a bankruptcy. It's a huge issue. It needs to be dealt with, and I think it starts right. It doesn't start when that child is going to their first year of college. It's probably got to start when they're a freshman in high school, and that's probably not the way you wanted to get that started, Bobby. But,
No, that's fine.
No.
It's the awareness for youngsters and how they need to get themselves prepared for life has never been greater.
I think the link of savings habits and your ethics about managing your own finances, no, you don't default on loans and you don't take too much of a loan that you can't pay it back, often comes from family, from multi-generations, and again, the role modeling that may have happened. The savings habit today, I think, likely will be formed on a 4-inch screen. That the students that I have, the only habit that they've got is to work on their phone, and everything in their life somehow connects to that. So the innovation that needs to come through, the education to form those habits for them, it seems to me that Chase should be working on, would be to deliver those kind of services on that screen, because that's where the younger generations are. And you know, that's great. That's the way the world is now, but we have to respond to that. So grandmother's not looking over my shoulder, but Apple is. And so I'm going to make sure that we can use that technology to our advantage.
I'll just add, and you, thank you, and by the way, we are attacking the 4-inch screen for those college kids and the younger generation, and you know, we have a banking app, Chase does, that's, you know, was ranked in a top leadership position of the best app in the industry, and we're going to continue to modify and improve. But having said that, you're exactly right. You look at a screen, everything's, you know, their whole life's on their smartphone, but what they don't have is the underlying understanding and education about what it means to take out a loan and what it means to budget yourself to pay that loan back. And somehow along the way, we've lost the moral fiber around what our accountability and responsibilities are when we engage in a transaction. So what we have to do a better job is, at doing is, and all of us, is to teach those students and kids at an earlier age about what it means, what's the effective interest rate, what's this mean? You know, the credit card business is complex, there's a lot of players, you know, it's the ease of payment, it's great, it's fast, it's convenient, but really what does that mean when you get the bill in the next 25 days when you went out and spent, you know, $1,000 on a TV, and you know, how are you gonna pay for it? So we have to be better at forward thinking and conditioning these people on those types of purchases, or otherwise it just accumulates and accumulates and accumulates. And so I would just add that I think, this is my opinion, and you know, I don't know if it'll ever fly, but I think we should make it a requirement, whether at the college and university level or even at the high school level, to have financial literacy as part of the curriculum.
You know, I couldn't agree with you more, Jim, and we do, and the team here will verify, we do an enormous amount of financial literacy work, and unfortunately in the schools, and many states now have, I think, a train-the-trainer program, but the curriculum is so full of other things. Regretfully, the response we get is, well, there's really no time. And I think they ought to drop 10 other things and add a financial literacy mandatory curriculum. So I totally agree.
Another group, and we talked about it a little bit here, alluded to it, are folks who, for lack of a better term, are off the traditional banking grid, the unbanked. Folks who do not have access to mainstream banking services are, going to check cashing places, are going to rent-to-own places. And in some ways, I think this number is growing because as the credit market has tightened, it makes it harder for people to get loans. So it could be also people trying to start a business and can't get credit. So I'm interested in thoughts about what are some opportunities to assist those populations, or their products or services among all of you that you know of. How do we help get those populations back into the traditional banking system? If anybody wants to take a start.
I hate to be the lead again here, but these are the people we deal with. And believe it or not, a lot of those people have had, for whatever reason, a bad experience with a bank. A lot of those people are I'm trying to be polite here. They've had an experience that has turned them off. They're now on a check watch system, so they no longer qualify for a checking account. And the check cashing industry, and if there's anyone in this room, they had reached out to us to try to assist and so on and so forth. And their attitude is they provide a service that the banks and the credit unions had stopped providing in terms of short-term walk-in the branch and get a $300 loan because the muffler fell off the car or the child needs insurance. And I'm not justifying their existence, but I think what we have to do is re-educate the unbanked, and I have forgotten the number. There are an enormous number of unbanked people right here in Central Ohio, and that always startled me. I think we've got, it's a trust factor, and as a former banker, I'm a little confused by that when you could walk in someplace that you don't know versus a bank, but nonetheless, there's a trust factor, and I think these people need an opportunity. We've participated with banks here in Central Ohio that they go through a program and then they get reestablished the opportunity to get a new checking account, because it all starts with a checking account. So for me, we've got to rebuild the trust factor, and we've got to reach these people and try to re-educate them about how a bank can help them.
Michael, anything with businesses that you're working with who are having a hard time getting credit, or?
I was sitting here thinking, I'd love to jump in this conversation, that almost have to bend the discussion a little bit here.
Okay.
So most of the time when we have these discussions, it goes to individuals who are, I will say, they've had some kind of financial distress, or they're at the lower end of the socioeconomic scale. But I don't know how many of you have ever been to one of these gatherings we have at Ohio State every, I think it's the second Friday of every month, called Wake Up Startup. Anybody been to one of these? Okay, so Wake Up Startup meets every Friday morning, 7:30, the second Friday of every month. And there's about 100 people in the room, and then there's 4 individuals who stand up and pitch startup companies. Basically pitching the ideas. Maybe they're looking for a connection, not necessarily for funding. Most of them would love to have the funding. But they're looking for connections. They're looking for mentors, other opportunities. They've done this they're coming up on a year anniversary of doing this. So 11 times they've done this. It's never been of like, oh, gee, there weren't enough people to come up with new ideas. Every month, and they're waiting in the wings. Now, when you go talk with these individuals, who are mostly younger people who are starting, some of them amazing businesses. I think last meeting we had an individual stand up, and they started their first business when they were 12. They were now 19. They were on their 3rd startup business. These were highly, highly capable individuals. No bank. Okay? So now you start sitting here and you go, okay, now wait a minute, what's going on there? Well, it's oftentimes what they're finding is that for their purpose, they're going other places and finding where this money can be. And the Central Ohio market, one of the positive things here is there's a lot of alternative finance sources here in this market. So it tends to be a nice attribute to have when you're trying to have this kind of a startup economy. But I think sometimes we need to kind of reverse the view of this discussion and realize there's a lot of individuals that are some of the ones that we most admire in our economy, that they also look at this in a completely different way. So, thinking in terms of the future and what you're going to try to be doing to service, to work with these types of individuals in a financial model world, what are the services are you providing? You have to almost look at it in a whole different way.
Great. Well, I've been given the signal. Jane does a very good job of timekeeping. And we're ready to take some questions from folks in the audience, and there's a microphone here. If you want to come up and tell us who you are, what your organization is, and
I'll get you started since
Okay.
I did the timeout.
okay.
First of all, I've never had the opportunity to thank Bank One, Chase, for providing me with a business loan many, many years ago. So thank you.
Thank you.
And second of all, I'm very concerned as a voter and as a consumer and as a citizen of Columbus about this whole economic illiteracy. What can move that needle? It is critical. I mean, some of the things you hear coming from politicians' mouths, some of the things you hear coming from ads, students, YouTube, you name it, people don't have a clue how the economy and how finance works. What do we do?
Well, thanks for that question. Such a simple question, but a very complicated answer, because really I think it takes, not to sound hokey or anything, but it really takes all of us in our society to be part of the solution. And that includes mom and dad, grandma, grandpa, and the individual consumer himself or herself to want to learn and raise their hand up when they don't understand anything and question the integrity of the process if there are a lot of question marks around somebody trying to sell them a product that may or may not work. Obviously, our corporate citizens, and especially folks within the financial services industry, have a huge part and a huge ownership of this issue, and we all take it, all of us in the industry take it very seriously, and we just really got to get out there more and more and be ahead of it, and at the same time, making sure the persons themselves want to be able to learn and understand the ins and outs on how things are structured, what our loan terms mean, and yes, if you make a loan, yeah, banks would like you to pay it back, and then I think the other part of this, which really it's hard to really sum up and kind of summarize, but it's out there with an ever-increasing influence, and that's the regulatory environment. And so you mentioned a lot of companies. I can tell you I have a lot of friends that I personally have turned down for a variety of reasons for loans, but I have a lot of friends that ask me that same question, and I say, look, we have certain standards and underwriting disciplines and policies that are in place internally, whether it's business loans, consumer banking, or others, that we have to follow and to the integrity of the policy, because we do get examined and we have reports and requirements and audits to the variety of regulatory bodies that are out there. So it's not as easy as one might seem to lend somebody $50,000 because they have a great idea and this business could take off in 2 years. I mean, we really are burdened by some of the regulatory issues that are out there, and some of which rightly so.
One of the projects that I work on, it's sort of in this realm. You take people where they are. You're ready to go, and when you come across someone that has a need, you're ready to give them information or give them a hand. We do tax returns for low-income taxpayers in a neighborhood not too far from here. And so the past couple of years, our service has been a prototype, combination of United Way, IRS, several of the banks in town, including Chase. For some of our clients, their tax refund that we work on and get them that day represents 1/3 of their cash inflow for the year. Gee, I don't have any cash during the year. I can't save anything. What do you want from me? Well, you have it today. And so we talk with them before and after we do their tax return. And one of the prototypes we did last year was, I'll tell you what, you put $50 into a savings account, and we, meaning Chase, will match it with another 50. But you can't just do it once. You have to do it once each quarter, and then we'll see you next year, and we'll decide then, how have you done in forming a savings habit? So we run across them because they have to do a tax return to get their refund. Now we're ready to go. And it's not just meeting them in high school, it's meeting them wherever they are, whenever they need the help, and then have some services that you can give to them. So I thought that prototype worked well. I presume it's going to get bigger over time. But matching dollar for dollar savings, that tends to work.
And from our standpoint, Bobby, I think we have decided that besides those that are in debt or come to us for a specific service, we're now going to start offering a variety of educational services that will be tailored to that family's need on whether it's understanding their credit report, whether it's understanding what kind of business or what kind of banking services they need, or whatever it might be, retirement, and we're going to start focusing on that in a very big way.
Good. Good question?
Yes, my name is John McKnight. You asked to state the business. I work for Reif's Auto Body, independently owned collision repair shop here in Columbus. It seems to me that our society has kind of built itself on borrowing. You know, from very young age, you know, you want to go to college, you get a loan. You want to buy a house, you get a loan. Buy a car, get a loan. Start a business, get a loan. Even vacations. And that seems to me to be sort of fundamentally wrong. It seems like it's become that's the foundation of our economy. So borrowing is what needs to happen to stimulate our economy. That same borrowing ultimately seems like it's what's put us in trouble. And to get out of it, maybe we need to start borrowing more. And it just seems all mixed up. It seems like things should be set up differently. Mike, your organization sounds like it does wonderful work, but I expect you probably don't have the time to counsel many people before they need your services.
That's always a problem.
You know, I may be a train wreck waiting to happen, but I'm not going to know it until I'm in trouble and then have to come see you.
Yeah, it takes about 2 years for you to admit.
Wouldn't it be
something's wrong.
fabulous for your organization or others to be able to offer services to educate the people that aren't in trouble to help us get there? And the banks, you know, financial services deal with 401ks and a lot of savings mechanisms, but also, you know, I get credit card offers in the mail every day, and they're awfully stinking tempting. So I don't know. It just seems like somewhere in there something fundamentally is wrong. So turn that into a question. If you could address that for me, tell me I'm wrong, and explain why, or tell me I'm right, and what should we do about it as a society? Thank
Well,
you.
as a credit counselor, I truly believe that the use of credit wisely is a good thing.
Absolutely.
And that our economy was built on the effective use of credit. But regretfully, I can't disagree with what you just said. There's an issue out there that people want it, and they've got a piece of plastic in their pocket, and they can just go buy it, and all they really care about is what's the minimum payment. And I guess that's probably the reason we're in business. But on the other hand, to the point of your question, that's exactly what we're trying to do in terms of making the consumer who comes to us understand, because not all people, we deal with about 2 out of 10 that come to us actually go in our program. The other 8 needed some serious readjusting. So we're trying to focus our efforts on making sure that we teach them good financial habits so they don't borrow unless they need to.
I'll step in real quickly. I'm Susan with the good fortune of working for the Columbus Metropolitan Club. I don't get paid to come to the mic. Going back to what you, Jim, if I can call you Jim, mentioned about financial literacy.
Yep.
Why is it not in our curriculum? And how soon can it be? Way back in the 60s, the girls took home ec, the boys took shop. Seemed like it made sense at the time. Wait a minute. So, you know, and then we teach, you know, and we manage the other things, but that's when we need to learn it. That's when we need to learn it. We can't count on grandma and mom and dad because there's too many people out there in financial trouble, and they're bound to be in financial trouble, and they don't have a grandmother, and they don't have a father. It's got to start in school. How can it become a part of curriculum? OSU? Can somebody do something? What do? Do we have to march on the Capitol?
Pretty much.
It seems pretty simple to me. It's got to be just as simple as reading, writing, banking.
Yeah, you know, if you were to make a legislative change to make that a required part of the Ohio curriculum, yeah, you could do that. I mean, you'd have to work that legislative issue. Well, you could start, and it takes a lot of others. But I think what it's so interesting because the crowd here, we're mostly older, and so we see that kind of thing and we go, yeah, this makes total sense. But it's not oftentimes viewed the same way. And I think it's going to take a movement like this to not only talk, I think we've talked about understanding personal finances, a little bit about economics 101, and I think there's kind of, I hear this from time to time, this growing desire to have a little bit of entrepreneurship, at least a touch of it somewhere out there, because if we don't have people making new companies, then that's going to cause a whole bunch of other problems down the line. So, you know, I'm sure there'd be a way that you could craft a curriculum that would be pretty cool, that would both interest the students, help them to see where this is all going to, as opposed to somebody lecturing me over my finances, which almost nobody likes. So, yeah, I think there's a way to go about it, but you literally are talking about changing the core curriculum of the Ohio schools.
My answer would be, let the private sector solve it, not the education bureaucracy. I'll hide my employer's name here for the moment. My analogy is to driver's ed. When I was in school, driver's ed was a course I took in high school and got a grade for. Now it's not in school anymore. It's provided, for the most part, privately. I think that's where financial literacy stuff has to come. I'm guessing get a better product, a reasonable price, and probably more effective measurement of what financial literacy is before and after the course.
So one last question.
Hi, my name is Warren Fishman, and I really appreciate all of you coming to the Metropolitan Club. This was a great education. I heard a couple things. One of them, Jim mentioned one time morality, and I don't know if it's the press or what it is, but in my business, I buy houses and I rent them, and so often I get calls from people who, and I know it's very complicated, I know there's some people who don't deserve to lose their houses. They worked and their job went overseas or whatever, but they say, I'm a victim of predator lending, and the bank would not settle with me. I missed 18 months until they foreclosed. I didn't make 18 payments, but they wouldn't negotiate with me. And I think the banks are kind of the victim. I know if anybody that called me loaned somebody $100,000, and then 6 months later I called them and said, listen, I'd like to negotiate with you. I only want to pay you 50 back. It'd be a problem. So I think that's part of education. I'd like to know what we're doing to address that, and especially consumer credit. I talk to people who say, oh, I'm in consumer credit. My favorite is, I went bankrupt, so you can trust me now. I can't go bankrupt again for 7 years. Okay, okay. So, and I hear that a lot. And so, what are we doing to go back to the old-fashioned value? When you sign a contract, you're supposed to pay it. Okay. Now, it might take longer to pay it. You might have had strife, but you pay it. And so, what are we doing about that?
Well, the blame game, we could all discuss this
That's
for the
right.
rest of the afternoon. So
I'm not going to.
It's all of us.
It's not blame.
there were a lot of
But it's a very complicated problem.
Yeah.
But I seem to hear that the bank is the predator, and they're the predator because you can't keep the commitment that you made to them.
well,
Before you start, and then you can, I would thank you. Thank you for the question. Appreciate it. I would just tell you that we, and certainly probably every other financial institution that issues mortgages, we do not want people to, surrender their home and leave the house. We want to maintain the integrity and quality of life. We want people to stay in their home. So we, as an organization, part of your question is, we've established these Chase home ownership centers across the country. I think we have, 85 or so, maybe 90, Jeff. 3 of which are here in Ohio, one in Northeast Ohio, one here in Central Ohio, and one down the road towards Cincinnati. So, and really what we do there is, we're counseling the consumer and working to find ways to, because every situation's different. Every situation's different, which makes this a unique process. But we work with the consumer to find ways to keep them in the home, modify the payments. Let's figure this thing out because we don't want to evict. That's the last thing we want to do for a number of reasons. So that's one of the ways we're handling and trying to address the mortgage issue by these Chase Home Ownership Centers. So I'll let you add.
No, there's very little I could add to that. I think from our perspective, that was a good question because a lot of people want to blame everyone but themselves. And at the end of the day, they knew what they were earning. They knew what they were getting into in most cases. And regretfully, it's a case where what we see is usually after the fact, a train wreck, and you try to get the mortgage company together, you try to get the lawyers together, and you try to get consumer credit together to work out a viable solution so that it won't happen again. And it goes back to the education factor. And I honestly believe that the people that have gone through this once, because this last round we see was a wake-up call, and they are really looking to start over and to rebuild a life that is respectful of all the financial issues they have to deal with.
Thank you. Thank you all. I think, lifetime resident of Central Ohio, a former bank lawyer with Bank One. I think the news you brought us, Jim, of things are better around here is heartening. And I think that's in part because we've been blessed with a great financial community. I think we've had, I knew Mike when he was originally a banker, we do have a great financial community, a great banking community that contributes a lot to the community as well. So thank you all for participating today. Let me just remind you, we'll have another banker next week, Steve Steinhauer from the Huntington. I want to invite you to continue today's conversation out in the lobby if you care to. But first of all, let me thank Jim Malls, Mike Kappas of Apprisen, Mike Dalby, and Dr. William Robbie, and most of all, Bobby. Thank you. Thank you for coming today.